clients that we serve and some of our big reinsurers on the platform. I see Mr. Otto is also there. Thank you for the opportunity for the presentation to present to you all today. Right, so to those that do not know me, so you know, Actuarial Insurance, we sit in the same environment, but sometimes we sit in different corners in the same environment. For those that do not know me, my name is Simba Makwembere. Like was described, I'm into insurance and reinsurance. I also spend some time doing aviation in my spare time. I like flying, and the convergence of aviation science and insurance science is what keeps me awake. But just to give an introduction to our organization, we are an Afro-Global insurance and reinsurance broker. We also do risk financing as well as actuarial consulting. We are based in South Africa, in Johannesburg, but we also do have offices in Ivory Coast to look after French-speaking Africa, as well as in the UK, which acts as a gateway into the international markets for placement of business into the Lloyd's, as well as open market European markets. So as an organization, we do 6 things. We do direct insurance broking, where we are focused on African corporates across the African entities. We also do global markets, that is multinationals, that is African corporates that are operating in more than one country. So we like to do regional programs, we like to do global programs for them. The other aspect of our business is reinsurance broking, which incorporates both street and facultative across a number of classes, but also specializing in some classes such as agriculture, such as engineering, just to mention but a few. We also do actuarial consulting. We are focused on product development, assisting our clients in that respect. We also do risk financing or self-captive formation. We focused on rent-a-sale, UMA formulations. We do have the ability to do both onshore and offshore captives, and the jurisdictions that we use for offshore captives is Bermuda, is Mauritius, Gibraltar, for those that require those services. Last but not least, we do have a life division, which is focused on group policies, individual policies, as well as reinsurance. We currently operate in 4 continents, 55 countries. In Africa, we serve about 47 African countries. We are a team of 62 people, and we manage in excess of 25,000 policies. What I would like to do today is subdivided into 3 things. I'd like to spend some time discussing the state of the insurance market, and in that respect, I would like to break it down into 3 perspectives. We'll look at the global perspective, we'll look at the dynamics that are at play in the African insurance market, and then zero down in some of the developments that we're actually seeing in the Zim market. I'd also like to spend some time discussing about the new norm that has been brought forth by the COVID-19. I'll then leave you with some thoughts that I believe that as actuaries, you must spend some time thinking about to shape the Zimbabwean insurance industry, and then open it up for questions and discussions. All right, so maybe just to kickstart the discussion, some top of the mind issues that are at play around the world. Obviously, most executives are spending some time thinking about COVID-19 and its impact on their businesses. They are looking at the challenges, they are looking at opportunities in the same vein. And they are also spending some time thinking about probably what I could call some negative perception that the COVID-19 claim-related or related claims it actually brought into the industry. I think you would recall that at the onset of the COVID-19, there has been some challenges, especially in some of our African markets, such as South Africa, such as Namibia, around BI-related claims, that is business interruption-related claims, and some of the issues are at play at courts. And obviously that brings a negative perception into the industry, to an already dampened industry where trust has always been an issue in our African continent. I think executives are also spending some time thinking about digitalization that is across the world. This is, I think, probably one of the silver lining that we've seen that the COVID-19 pandemic has actually brought, which is the acceleration of the adoption of e-commerce, digitalization of systems, rather, let's say, the fourth industrial revolution. We've also seen the hardening of markets, especially in the international play. Not so much in terms of Africa because of the dynamics in terms of how reinsurance is bought, predominantly on a proportional basis compared to how we purchase our African or regional players purchase their retro from the international communities. I think at the beginning of the year, we saw an average of about 15 to 20% increase in the retro cost for our reinsurance players. But unfortunately, I think the situation at play is the reinsurers, our regional reinsurers, and some of our continental reinsurers are not able to pass the cost down to the insurers and ultimately to the end consumers because of the proportional nature of how we buy our reinsurance. Issues around skills is also at play across the world. And I think what is very key in most executives' minds is whether the current skill base that they have, be it for their actuaries, be it for their underwriters, would be relevant into the future. And how do you reshape your workforce to be able to adapt into the new economy? I think the one other thing that COVID-19 has brought to the fore is the issues of financial inclusion, which has been a subject for a long period of time, but we have seen how vulnerable the financially excluded are. We have also learned that the continued play and lip service to financial inclusion is a ticking time bomb, which has got huge potential political instabilities, also seeing and taking lessons from what happened in South Africa, the looting, etc. I think what we've also seen, and which is topical of most executive minds, is the systemic risk of globalization. A pandemic which started in China, within a couple of months had filled the entire globe. And this is also equally true in terms of how many other risks in the global connectedness has actually brought this systemic risk into our systems. And we need to spend some time as executives to think about how we are going to manage that going forward. We've spent some time, I think, in the previous discussion talking about IFRS 17, talking about the risk-based capital. I think it's something that also executives are also spending a lot of time thinking about in terms of the implementation of the risk-based and also this wave towards the movement to risk-based capital. All right, I would like to turn to state of market and just give you a global perspective in terms of what we're seeing in the international market. So we've seen that there is definitely a hardening of the global markets. We have seen premium increases, rate increases. We've also seen reduced capacity in some lines of insurance business. Some, reinsurers and retrocessionaires have now started to dust their policy wordings and coverages to tighten the amount of coverage that they actually give to clients. So no more freebies. And we are also seeing new additional clauses into the policies that speak to pandemics, that speak to contagious diseases, et cetera, from a short-term point of view. I think, like I've already alluded earlier on, we've seen the retro market pricing increasing 15 to 20%. That came up through to our major reinsurers on the continent, your Africa Res, your Continental Res, your FM Res, your Grant Res, etc., etc. But just to step back a little bit, the hardening of the retrocession market is already started even before the COVID-19 pandemic. But the drivers and the acceleration obviously has been brought by the COVID-19. What has been the driver just before the COVID-19 has been the increased number of losses and cat losses that we've seen across the world. I think if we look at Africa alone, with how small we are, we have seen, particularly also in Southern Africa, we've seen probably an increase in frequency of cyclones coming from the Indian Ocean, affecting Mozambique, affecting some eastern highlands of our country, Zimbabwe. And obviously this speaks to global warming, and it's expected that probably markets will continue to harden. The COVID-19 related claims, especially issues around the BI, which we have now seen insurers starting to pay, have also had a huge dent in terms of our insurers, our reinsurers in the retro markets, and there is need for a way to actually pass down some of those costs. The same applies to medical claims, which at the onset of the pandemic, we have seen a drop in medical claims, but due to the government's taking over the burden of actually treatments, but we have now seen a reverse in terms of that, where medical aid, where health insurers are now picking most of the claims, as it were. Like with anything, from any dark cloud, we see a silver lining. We have seen an emergence of new products as a market response to COVID-19, people working from home, as well as people working online, connecting with their colleagues, with their customers, increase in e-commerce. We've actually seen opportunities around cyber liability. It's estimated that by McCarthy that in 2020, there was cyber attacks of more than $1 trillion US, and insurers have actually responded in designing insurance products that actually speak to that, and we're seeing a huge uptake in terms of cyber liability across the world and also in Africa. Increasing number of insurtech and alternative distribution models that are primarily based on e-commerce. We've also seen an emergence of that. Some of them, or rather majority of them as well, being supported by blockchain. And we believe that blockchain is a thing for the future and will continue to be part of us into the future. I would also want to tend to speak about some of the dynamics on the African insurance markets. And before I do that, I just want to give you some key features of the African insurance market as it were. So on average, we suffer a low insurance penetration, which averages around 2.5% across the continent. And insurance penetration is a measure of how insurance contributes to the overall economy as a measure of GDP. So we see that insurance in the most of African countries is below 2.5% of GDP, which is a very, very low number and a concerning number. There's also some countries such as South Africa and Namibia, which are outliers, with a 14% for South Africa as an insurance penetration, 7.5% for Namibia as well. Most of these, they are driven from a life insurance perspective. In terms of the makeup of the insurance industry, looking specifically at the sub-Saharan market, South Africa is the biggest contributor of the insurance premium measured from a GWP. They contribute 70% of the entire insurance premium. And the top 5 countries from an insurance perspective, which are South Africa, Kenya, Egypt, Nigeria, contributes about 87% of the total premium. So it really leaves us a very tiny gap of all the other probably 46 other countries with very small premiums. So the insurance premium across the continent is far and few in between. I think, like we said in the initial discussions, the hardening of the African insurance market has not been severe compared to the global markets, owing to how reinsurance is actually bought. So one would expect that if the global markets are hardening, Africa should also harden, which is the case, but the severity is actually not the same. Some key developments that we're seeing in the African continent is some regulatory changes that are driving domestication of insurance. Particularly in East Africa, we know that Kenya has now domesticated its market, which requires one to be licensed in Kenya from the 1st of October to be able to access business there, particularly in terms of the reinsurance brokers. We've also seen Ghana taking the same approach, Tanzania also taking the same approach. So for Ghana, for Tanzania and for Uganda, they are taking an approach that every reinsurer and reinsurance brokers alike that are participating in their local markets they need to be registered and to be accredited by the insurance regulator. And this is as a result of some reinsurers that have been participating in those markets, some reinsurance brokers participating in those markets. They get the premium and they don't pass on to the reinsurers, and when there are claims, people are nowhere to be found. So I think that's the major driver of what we're actually seeing, the changes of domestication across Africa. There's also a movement towards, risk-based capital, which is a better risk management tool, which also sort of plays the level ground in terms of competition. You cannot have a big insurance company that has operated for over 100 years being required to keep the same capital with a new player. I think the movement towards a risk-based capital actually gives a fairer playing field and also protects the end consumer better. Current challenges across the African continent is the slowed down economic activity brought by COVID-19. And we know that it's well documented that the insurance performance is inextricably correlated to the economic activity or economic growth. So where there is no economic growth, insurance tends to suffer. The other challenge, like we mentioned, is the low insurance penetration, low consumer trust and awareness of insurance offering across Africa. And the trust issues really comes out of issues around insurers over-promising and under-delivering at the point when they are required, that is at claim stage. General lack of awareness and also cultural issues coming at play, affecting the insurance penetration. Also lack of industry innovative products that are fit for purpose for the African consumer is also a challenge. Lack of technical skills across a number of insurance markets is also an issue. So you'll find that the underwriters are not the underwriters that we would expect. The claims people are not as the claims people that would expect, and that actually gives a number of challenges. But with all these challenges, there are opportunities. I think the fact that we've got a low insurance penetration is an opportunity on its own right, because it tells us that we've got a longer way to go and we've got a bigger market that is untapped that we need to unfold our sleeves, keep our heads down, and actually partake and take advantage of that. Digitalization is another opportunity, and we've actually seen that coming through. COVID-19 has actually given us a head start to that. It's now not taboo for someone to conclude an insurance policy over a telephone, over social media, because of digitalization and what COVID has actually taught us. We've also seen emergence of new risks, so the cyber exposure. We've seen a huge uptake of cyber insurance in the African continent. We've also seen the development of telehealth across the continent as well, Zimbabwe included. We've also seen Zimbabwean entrepreneurs in the diaspora also taking advantage and building telehealth solutions to be deployed in Zimbabwe. I think the need of financial inclusion is spearheaded by various governments. We also now start to see that, and we also start to see the seriousness on the part of government and other players to take advantage of the lower SLMs. Looking and turning our focus to Zimbabwe, I would like to share 4 things that we are seeing and how the Zimbabwean insurance market is shaping up. The first one is we're seeing a shift of market focus. So if we rewind to probably 5 years ago, you would find that the insurers were focused particularly in their specific markets. You would look at a big insurer like maybe Nichols Diamond, a big insurer like Old Mutual, would be focused on writing corporate accounts and would not really care much about what is happening on the personal lines and or what's happening on the statutory insurances like your motor third party. We've, however, seen a divergence or a shifting of the market where your bigger insurance companies are also now wanting to partake into those statutory insurance, and they are building systems, digital platforms to be able to take advantage of that. We've also seen, if we are to take a leaf from the life insurers, that the biggest life underwriters now are now those that are writing funeral insurance. An example of Nyaradzo, which before people in the life space would then be focused on your risk benefits, on your pension insurance, not necessarily on the funeral insurance, but we're seeing that market shift. We're also seeing, insurers now trying to focus on niche areas. Particularly, let's say we've seen, the registration of Agriculture Financial Insurance Corporation to be focused on agriculture insurance. So we're now really seeing people focusing into specific niche areas. The regulator is now issuing microinsurance licenses that focuses on the microinsurance products. The other thing that we're also seeing is the development of the UMA model is borrowed out of South Africa. A number of insurers are now adopting this. They are now implementing UMAs, which is predominantly a third-party organization that acts on a delegated binder authority from an insurer that focuses on a specific market or niche area, and then drive their growth and distribute their products in a focused way. Currently, the UMAs are not regulated in Zimbabwe, but it is believed that they shall be regulated in the near future with the adoption of the legislation similar to South Africa. The movement towards risk-based and IFRS has been discussed, I think, on this platform. We are also seeing developments of that nature even in Zimbabwe. Niche and microinsurance, so the movement towards financial inclusion has also, pushed the emergence of microinsurance, and we see potential in the areas of agriculture, particularly using parametric to be able to go to some of our subsistence farmers and provide them fit for purpose products that will be able to speak to their pains that they go on a daily basis. The inequality as well, like we mentioned before, is a political risk. And as business leaders, as governments, we need to build models and businesses that are able to speak and to include everyone so that we manage the risks that we are faced with. Currently, we've got 3 insurance, micro-insurance licenses that have been issued by IPEC. And it's expected that also a number of insurance licenses are going to emerge from a micro-insurance point of view. All right, so let us look at the new norm. I think COVID-19 has been a headache, and as of now, we are still in a very good position because COVID-19 has not been a capital event. It has not affected capital to a huge extent, but it has affected earnings. So we've seen it as a more earnings event compared to a capital event. This situation might actually change depending on the speed of the rollout of the vaccines, as well as the impact of the continued losses that we continue to see with that are being brought by COVID-19. But what is the impact of COVID-19 on insurance businesses this way? So we've seen a drop on the GWP across the world by a 2% decline. And the loss has been largely from a life insurance business point of view. Short-term insurance has actually increased, or rather stayed static at 0.1%. This is owing to risk diversification. So when one sector doesn't do well, if you look at South Africa, where the hospitality industry has taken a huge knock, people are not able to pay for their premiums. There's been an offsetting effect with other industries in the technology space actually picking up, new exposures being picked up. That is actually given the diversity and has managed to make short-term insurance as a resilient portfolio of business. We've seen, naturally some huge job losses across the continent. South Africa with 2.5 million, estimated Kenya at 1.7 and Zimbabwe at 500,000. And obviously, you'll find that most of the people that buy life insurance is through their employers, and that would actually affect the overall impact in terms of life business. So the main classes of short-term of health insurance, business interruption have had huge knocks in terms of claims. We saw also an increase or a surge in claims in terms of commercial crime, particularly in West African countries, Nigeria included. We've seen a huge theft of PPEs. We've seen a huge theft of goods in transit, particularly PPEs in transit, which is now gone down now, but we had seen that increase in the initial phases. Luckily, it had not had a huge impact that affected the capital nature or the capital of our insurers. So the reduced velocity in cash in the economy obviously affects premiums collection. So our insurers across the continent have had huge challenges in terms of premium collections from their clients, particularly from corporates that we saw initially a divergence of some of their resources to be able to adapt into the new world as it were, as people were moving online. We've also seen initially in the period, at the peak of COVID, some insurers giving premium holidays to their personal lines clients, to their corporate clients. And we continue to see challenges around premium collection even to date. What does the new norm, what do we need to be aware of the new norm? So the acceleration of the adoption of online, of e-commerce, digitalization has brought new risks like we discussed. Cyber insurance is on the rise, and if people are looking for a way to grow their businesses, it's an area that we're actually seeing across. Some reinsurers have taken a leap, such as your First Mutual Re in Botswana, that have now become a dominant player in cyber insurance across the region. We've also seen telematics solutions coming up, and also people believing that they can be treated online, which is part of the silver lining that we've seen the COVID actually giving us. The need for diaspora to look closer to their families back home is something that we've seen, and we believe that is going to be the new norm. So we saw the diasporans being worried about their families, about their friends back home. And we've seen a wave of insurtechs taking advantage of this and providing diaspora health insurance, which is funded or sponsored by the diasporans across the world, looking after their dependents back in the home country. We've also seen, and this I think is something that would be for the future, a demand of tailor-made insurance products. We believe that there is going to be a serious shift of insurance policies that are designed to cover a subject matter compared to insurance products that are designed to cover a specific peril. If I could take motor insurance as an example, when one buys motor insurance products now, they buy insurance for a subject matter. They buy a comprehensive insurance that includes accident, that includes third party, that includes fire, that includes a number of perils. But the industry has never had an opportunity to say, but is this what the client wants? We've seen new insurtechs now promulgating to say you need to cover a peril. So I've got my motor vehicle insurance, I've got my motor vehicle. What cover do I need? So you need to give the consumer the right to decide what they need covered on their motor vehicle. So for example, one could say, I do not travel much. I would want to pause my accident exposure. I would leave the theft exposure because my car is parked, it's still susceptible to theft. But the accident or accidental component, I would like to park it because for the next 6 months, 7 months, I'm working from home. So we believe that similar approaches are going to go into the property and casualty, where the power is given back to the consumer to be able to determine what they need covered on their risks. Some thoughts for Zimbabwe, for the Zimbabwean insurance industry. I believe that there is need for continued digitalization of the customer journey. Insurers need to invest into the new economy, into the new e-commerce, and be able to actually access their clients digitally, be able to respond to their clients' needs with speed, 24-hour access to the insurer, as well as speak in the mode or in the instruments that the consumers actually want. New products and systems that give client more power, like we discussed, a movement from the subject matter-based insurance to a perils-based is going to be a thing for the future. And I also believe that is going to pick up in Zimbabwe. For insurance to continue to survive and to grow in its volume, we need to start thinking of disrupting other industries. With the advent and the emergence of the new economy, we need to think of ways of how we are going to disrupt. And I give you an example of diaspora health, which I think the insurance industry has been innovative enough to disrupt other industries. Diaspora health insurance is, in its truest form, a directed remittance of funds. And insurance, we see insurance challenging directly the traditional money remitting organizations such as West Union, World Remit, in taking a share of their wallet, in saying that, Mr. Diasporan, you do not need to send money to Zimbabwe or to any African country as it were. What you need to do is to buy an insurance product and direct your remittance into the insurance industry. So I think this is a good example of what we've seen some insurers in Zimbabwe doing and challenging other industries, and it needs to be applauded. And we need to find other industries as an industry that we can either work together with, or some other industries that we need to disrupt. For a long time, insurance has never been a challenger in disrupting other industries, but we have received so many knocks from other industries challenging us and taking our market share. Telecommunication companies have challenged us. Banks have challenged us. I think with the advent of technology and into the new world that we are going, we as business executives need to think of how we are going to be challenging other industries, how we are going to be collaborating with other industries, forming blue oceans in terms of where we can tap our market share. Some thoughts around skills and capability for the new era. The Harvard Business School predicts that 44% of insurance work that is predominantly repetitive is going to be automated by 2030. This means that as insurance executives, we need to start to equip some of our talents, some of our people with new skills so that they remain relevant post-automation of some of our processes in our businesses. So we need to invest in our workforce, we need to train our workforce, we need to teach them new skills, we need to collaborate with new industries so that we are able to provide better value. I'd also want to leave you with some food for thought. I have a couple of questions that come to mind when we look at Zimbabwe. So we know that most of our insurers' balance sheets are made up of properties. What will happen to the insurers' balance sheet if we continue with work from home or a hybrid of work from home and going to the office? The thinking is probably if the work from home continues, the property values are going to plummet. What will that mean to the insurance company's balance sheet, particularly in Zimbabwe, where most of the capital for insurance companies, over 50%, is tagged in property to preserve value due to the well-documented economic challenges that the country has suffered. Another food for thought is around climate change. How can we as an industry influence issues around climate change? Are we doing enough as an industry? We know that the major drivers, particularly in our environments, is power and energy, particularly from a thermal point of view. Agriculture, as much as we start to see smart farming, is also contributing about 21% into global warming. What are we doing as insurance executives, and how are we going to be part of this to change the narrative for the future? Climate change, what are the risk implications for us as an industry? We have seen an increase in the frequency of natural disasters owing to climate change. It is going to continue, but as executives, as insurance people, we need to start to influence some of these issues around climate change. Are we doing enough is the question that I would like to leave you with. We have also seen in the international market, international reinsurers, international insurance companies influencing how climate change in the insurance sector by moving out of specific insurance classes. I give you an example. Most international reinsurers, Swiss Re, Munich Re, Allianz, Chubb, they no longer insure, or they now insure on a limited basis, thermal or coal-powered power stations. What are we going to do as an industry if our ultimate capacity providers are pulling off, yet probably thermal is the biggest energy producing energy in our energy mix? What are going to happen to our power stations? We need to spend some time thinking about this, and it is coming fast and furious. From the work that we do across the African continent, I can tell you that placing thermal powered power stations has really become so difficult. You are lucky to get to 100% placement with power and energy, particularly in the thermal space. We now find it easier to insure renewable energy, hydro power stations. And in some instances, people are now thinking of decoupling power companies that do have thermal and hydro in the same vein. How do we enhance the skills of our actuaries so that they are able to cope and they remain relevant into the new world post-COVID? Is also another food for thought that I would like to leave you with. On this note, I would like to pause and thank you for the opportunity to listen to some of the thoughts and some of the dynamics that we're seeing in the market. And I will open this for maybe discussions or points of contributions. Thank you.
Thank you so much, Simba, for such a great presentation. It was really well researched, and those of us on the GI track really enjoyed this. Your wealth of experience across the African continent and between the reinsurance and insurance space really shone through this presentation. So we're really grateful to you for that. At the moment, we actually do not have questions. So I've checked in the chat, we don't have questions. And in the Q&A, we also don't have questions. If anyone in the audience is interested in interacting with Simba in the next few minutes, you could raise your hand so that you can speak with him directly. But thank you, Simba.
Thank you.
So I'm just going to read out some of the comments that we have in the chat. Sifela Nizimunya says, great presentation, Simba. Madiro Mashora says, great insights from Simba. Thanks a lot.
Thank you.
Okay, we have a raised hand from Mrs. Kafeso and a second raised hand. Okay, I'm going to start with Mrs. Kafeso. I've allowed you to speak.
Thank you. Thank you so much for your paper. I really enjoyed listening to it. I was wondering in terms of disruptive technology, I mean, we have the likes of Kodak, who just disappeared, being one of the largest companies in the world because of the technology that came through. I just feel in Zimbabwe, and if the disruption comes, what is it that people should be prepared for? So, for example, the landline was replaced by the cell phone, and everybody's got a cell phone. So, in this case, as the insurance industry, you have mentioned that these are things that are going to happen. Do you think we'll have the same insurance what we ever used to do? So I just wanted to know how prepared are we in terms of the disruptive technology.
Thank you. So I think we have seen how resilient the short-term industry is. I think that we've got some certain level of preparedness, and the fact that we are now starting to challenge other industries is testament to how resilient and how prepared probably our industry is. Yes, we are prepared, but I think there's a lot more that we need to do to continuously improve ourselves, to continuously improve our products and our services so that they speak to the needs of the clients. We also need to partake in the journey of collaborating with other industries. I think we say that the new competition of these days is collaboration. So if you collaborate with other industries, it then becomes difficult for them to disrupt you. And we're seeing that more and more coming through across Africa, across the world. So I think that we've got some level of resilience, but we do not need to sleep on the job. We need to continue to do more. We need to continue to look for new avenues of growth. Probably we need to continue to lobby the government for some statutory covers, which currently we do not have in the country.
Thank you for that, Simba. The praises are really still streaming through. We've got a comment from Mr. Tishareva saying, great knowledge of the insurance market, Simba. Thanks for a great presentation. Tafadzo Chiduza, who's the ASZ president-elect, says, great presentation indeed. Many areas to digest as we map the way forward. And then we have our question in the Q&A box from Willard Saopa. He wants to know how Zim compares with other African markets in terms of GI penetration and which lines of business are on the rise.
All right, yeah, so thank you for that question. So maybe just to give you a perspective in terms of how Zim compares to other industries. So currently, the GWP for Zim is estimated around 100 million, 100 to 110 million. So that compares in the same range with what we see in Mozambique. We are now behind Zambia, which is now sitting at around $150 million. We are far behind countries that we used to be far ahead of, such as Angola, which currently writes about 800 million. But we know that the 800 million bulk of it is on the oil and gas. The insurance penetration in Zimbabwe is a little bit higher than other countries. I think we sit at about 3.6% compared to the average of 2.5%. But we are behind other key markets such as South Africa, such as Namibia. Like we said, we sit from an insurance penetration point of view around the same insurance penetration with Kenya, for example. Yeah, it's like we said, you know, insurance penetration or insurance performance is got a direct correlation with the economy, and our economy. It's well documented that we have not performed well probably for the last 20 years, but I think the industry has shown resilience across during the period, and it continues to survive and has got a greater future. So we see that is it IMF, they've now revised the economic growth prospects for Zimbabwe to 6%, and majority of that is being expected to come out of agriculture. And I think the registration of a government-owned insurance company through Africa, the Agriculture Finance Corporation Insurance, is probably going to assist in terms of the penetration in the agriculture sector. We understand that they are going to be focusing on the command agriculture, which has been doing very well. If you compare it to other schemes that the governments are running, you also see that probably we are going to see more and more parametric insurance and supporting of the subsistence farmers. So I think from an agriculture point of view, we are going to see more penetration. Zimbabwe has already done very well in terms of premium in the agriculture sector. I think agriculture is probably 28% of the entire insurance premiums. And this focused approach into niche areas, I think, is a good thing. If you look at South Africa, probably it's argued that the insurance penetration is high because of the UMA model, which focuses in specific niche areas that allows people to continue to dig on a daily basis in a specific niche and to grow the insurance premiums in those areas. So yes, we are now lagging behind other markets, but we are still comparably better compared to other markets. You know, like we discussed, the insurance premium is far and few in between. You look at other smaller countries, such as Sao Tome, they've got a total premium of, let's say, 2.3, the entire country. You look at Guinea-Bissau, it's a 5 million premium in those countries. So I think we still compare way better from a skills point of view. As much as there's been brain drain, we still compare far much better to other countries. So Zimbabwe is doing very well in terms of the skills. And I think it's one of the reasons why the industry has actually managed to survive this far through a continued downward spiral of the economy.
Thanks, Simba. We also have a question from Madiro Mashora. He wants to hear your thoughts on a certain assertion. So brokers seem not to be very active in IFRS 17 implementation discussions, but it is believed that they are going to play a big role in the data provision and production development in the future. What are your thoughts on that?
Yes, that is very true. So I'm a broker myself, and I can tell you that I've spent less than 3 hours of my life looking at IFRS 17. A broker's role, and I speak quite honestly, is we look for premiums and we're not really interested in terms of how the insurer manages their balance sheet, how they look at their financials, etc., etc. So yes, brokers would play an important role, but their role is particularly in feeding the information to the insurer, which is pretty much what they are doing anyway. So brokers are the least people to ask for information because they seem not to want with the information. But I think the interest should be driven more from the insurers, from my perspective.
Thanks so much, Sarah. That was our last question, it appears. We'll then move on to closing remarks from Taurai Jamu. But once again, thank you very much for this great presentation.
Thank you.
Thank you, Nekai, for hosting that session, and thank you to Simba for that presentation, question and answer. I would like to take this opportunity really to thank everyone who has made it to today's session for joining us on day 3 of the Actuarial Society Convention, which is running under the theme of the new path, the new normal. Times are hard, times are a lot more different. New and different challenges, I think, are being faced by various experts and actuaries and insurance practitioners. And I think taking time to listen to each other as we discuss these issues, I think it just helps us to become much better in terms of how we deliver in the different roles that we play in the different spaces that we occupy within the insurance industry, risk management, and also banking and general financial services. So as we wrap up the day, I would just want to, I think, acknowledge some of the talking points from the various presenters who presented today. Tawanda, I think, made a presentation which was talking to universal health. I think he pretty much nailed, and maybe I think the highlight of the presentation was that universal health has become more of a need, despite perhaps the challenges that may be faced around the developing the right funding model. And I think there are some questions to be answered, but basically I think the key takeaway from that presentation was that universal health is a need, and as actuaries we have got a role to play in terms of the design of the various funding models that may make sure that it is delivered in a manner that speaks to everyone affected. Then I think the Takalani, Victor covered IFRS 17, I think right from the beginning of the implementation journey, and also some specific details, and also trying to contextualize the issues for Zimbabwe in terms of the challenges that may lie for practitioners in Zimbabwe when it comes to implementing IFRS 17. They also went into detail around eligibility testing for the premium allocation approach, and how close an insurer would need to work with these auditors in order for them to have some form of alignment when it comes to materiality, given that materiality is not defined within the standard. So it's something that would require maybe conversations to then take place. I think what was a key takeout, especially for me, was the polls that were run during the presentations, which showed us maybe the different levels of maturity in terms of implementation for the various players operating in Zimbabwe. I think the key takeout for me there was that there is still a lot of work to be done on the IFRS 17. And I think as actuaries, we have got a significant role to play, and we need, where we play that role, we need to make sure that we try to maybe rush the agency of the issue, because we could be running behind time as far as implementation is concerned, given that 2023 is not far around the corner, and also the volume and amount of work that is required for IFRS 17 implementation. Then this last presentation by Simba, I think covered a number of issues, and I think I would like just to thank him. I'd just like to thank him for that presentation that he made, which essentially helps us in making sure that we are aware and on top of the situation in terms of what we are trying to do within the general insurance space. I think some of the key takeouts from what he covered, I think the hardening of the global markets, the policy weightings that are changing as a result of lessons from the pandemic. And also, I think on his last slide, he covered a number of issues, digitalization of customer journeys, which I think has been accelerated because of the pandemic. So I think we are very grateful and for the presentation, I think, and for the world of knowledge that has been displayed by the various presenters. I think they really took their time in terms of preparing for the presentation. So well done to the presenters and for everyone who was listening around. Lastly, I would like to also acknowledge our media partners, ZimMind Newsday, who will also be covering this particular event, and also our sponsors, Old Mutual, AAC, Econet Insurance, Clarkson Insurance, Zimbabwe Actuarial Consultants, Coronation Solutions, EcoSure, and Pentact Solutions. So without you, would never have been able to host this particular event. And next week, this Friday around this time, we'll be wrapping up this particular event. So I'll be asking you to join us again for the last dance for the ASZ 2021 convention. But otherwise, thank you for spending this 3 hours with us today. Over to you, Venegai.
Thank you, Taurai, for summarizing this day so perfectly. And thank you again to everyone who has attended. Have a great weekend.
Is it just us now?
Yes, it is just a special class now. Just a special class at Taurai's Kids.
Hi guys.
Okay, that's all right for the closing remarks. think we had
Yeah, that was something else.
You presented so well, Chow. You presented so well. And you added some spice to it. You planned for that one.
Remarks of
You planned for that one. You knew it. We were too serious and tired.
That's too serious.
Mm.
Talk.
Hi, blessing through you. I believe you are the chair. Thank you so much, guys. I think today we did well as well. On my part, I think I missed part of I had another presentation I was presenting in another forum, so I missed part of the initial parts. But I thought the parts that I was able to attend went very well. I'm not sure if there are any hiccups to be attended to. I think those are my initial remarks.
Okay. That's my assessment as well. Yeah, Taura, you can come in.
Yes, so I was going to say maybe same comments as Tafazwa for me. So I missed Tawanda's presentation, but the presentation by Deloitte as well as by Simba, I think everything was moving quite smoothly. No, I think nothing out of the ordinary came out, and I think the presenters were also well prepared.
Yeah. Anyone else?
No special notes from me.
No special input for today. Okay. Then looking into the next week. The next week is really tricky. We had Tawanta in the next week. He was sort of our star highlight and sort of our confirmed speaker, one we knew would not let us down. So he moved to this week. This then means that next week we need to work a bit extra hard in terms of getting the speakers for that one. We have the recorded presentation, which definitely said is about 20 minutes. We also have that presentation, which was supposed to be done this week, which we moved into next week. But then because this is an external person and they've also cancelled on this week, we are not quite sure if they're going to pitch up next week, and we are not quite confident as well. That leaves us very open and exposed in terms of who to pitch in and who to come through. Tawanda has always been our standby in case anything happens, and we have played that card already. So I think going into the next week, we need suggestions on how we're going to go around that one. Definitely, if you are on the line, if you can just quickly share what we have so far, if you had updated it, so that at least we know the direction we'll be taking.
All right, thank you, Blessing. So in terms of what we have, we obviously have the customer experience lady from FBC. So that was supposed to be the opener for today. I guess it would be an opener for that, for Friday, or for the next week, sorry. And then we have the recording is 29 minutes. So we can just say 30 minutes long. I'm not sure now how we go about in terms of the question and answer, but the speaker had said you can then share any questions that may come up out of that presentation, and then she can respond later on, just like what the IFOA president had also suggested. So those are the two presentations. And then we also have the slot for the awards thing. I'm yet to get feedback from the council in terms of this year's program around awards, recognition, etc. So that could also take a bit of minutes, maybe 15 or so. I think, and then obviously the closing note from Tafadzwa as well. So I think those are the speakers for the last day. Maybe getting one more would also make the day a bit more solid and comprehensive. And I guess given your concerns, Blessing, around the customer experience speaker, that maybe she might default again, we don't know. Of course, the video will not default. The video we already have, so that one is sorted. But I guess it's also getting that affirmation from the lady from FBC in terms of your diary for next week, how confident she is that she will make it. Yeah. We also have Michael still on the cards. Tafadzwa had hinted that in the event that we need him in the very last minute, he's able to talk to him and get him to prepare if we need him. So that's another possibility that we could probably, look at.
On the last one, what would it be on? Because I remember that there was a conversation on the banking, there was a conversation on ZCAP. So what are we bringing in for?
Maybe through, yeah, okay, maybe through the chair. Okay, mine was a separate comment. Others could always comment as well. I also wanted to suggest to say, did we eventually get Donald's slot? Or did he submit something? Because remember, he had said you need about 5 to 10 minutes or so. Or it's now forgone.
We never got anything from Donald. So I don't know if we're going to get that. I'm not sure. I might have to follow up, but yeah.
Okay. Okay, and also okay. So thank you. I don't know what others think when it comes to if we still